Well, welcome back for your third and final run. I'm sure you're all going to be so glad to be done with us and with this. So I just repeating for the sake of the camera and the recording, the way we're going to set up the class tonight, we are starting just a few minutes late, so we might stay a little bit, we're definitely willing to stay after with questions. But what we want to do is a quick review of what we've talked about up to this point, specifically last week's material. I want to shove at you the new stuff where we talk about the banking workflows and reports. And then we want to carve out some time for some questions and answers specific to you. There are two of us. We're happy to sit down one-on-one and take as much time as you need. We also need to make sure that you do not leave without getting Amanda to email you the gnome extraction worksheet so that those gnomes and then the income that you've put in can be removed from your books. We tried printing it out and didn't work out today. Also, we would like to really make sure that you stick around to email us a survey to kind of let us know how things went with the course and what you'd be looking for like an intermediate level learning course if you were to return. So that being said, let's dive in. Okay, any questions from last week? Anything that sticks out? Anything really helpful from last week? Did you use any of what you learned last week in the course of this week's work? That was a lot of repetitive words. No one's used it?
Don't know.
That's fair. Okay.
Well, one thing that I did notice when I logged on and I tried to get into my banking to do my reconciliation because I hadn't done it, it said I was in accountant mode, but I wasn't. I was in business mode. Because I kind of wrote him a dirty letter. I wrote him a dirty note.
You did the feedback? Doesn't it feel so good?
Come back with this canned message.
Yeah, thank you for your response.
You should be in business. You are probably in business, but not accountant. But I was.
So the new update, and I think it was last week that it rolled out, they're doing away with they're consolidating the two views. So it shouldn't be accountant or business anymore. It really should just be the one. And there could have been glitches with that, which really, the technical
difficulties.
They have.
So.
This update was rather large and did come with a lot of people who were not happy. So I'm sure that feedback button's been abused. The invoice is rough. But nonetheless, I'm glad you used the feedback button. And the tech support answer of turning it on and off again, usually helps. If I sign out of QuickBooks Online, close the browser, restart my computer, update my browser, and everything's reset. It feels like it takes a lot, but it's sometimes worth it. Okay. But good. Okay, so last week what we talked about, in summary, very short, was workflows comprised of forms. We talked specifically about the customer workflow, which starts with an estimate, turns into an invoice, turns into a received payment, turns into a bank deposit. Yes, that's how it works. In my mind, I have to map it out. I'm reading it. And then with the vendor workflow, we have, similarly, we'll collect accounts payable or bill forms, different from invoice forms, as we know. And then we will pay those, so make a bill payment form, and then see the money leave the bank account. So we need to know, and we spend so much time working on understanding the forms and what they do, because what we're going to talk about tonight is everything that's happening in the background. All of the buttons that we're clicking and pushing here are creating those forms. So if we find something wrong, we know what to look for by the form's name or amount or whatever to fix those errors. So I told you that was the long division, the longhand way of doing stuff, and now I'm going to give you the calculator. We're going to show you how to do it the easy way, and some tools, hopefully, some processes that'll help make your system streamline and smooth and make your experience with QuickBooks a lot more enjoyable than it has been. Because it's fair to say it's not always an enjoyable experience. Yes? Any questions then? Okay. Yes. It's very important tonight because there's going to be a lot of interaction that we all use the mic and roll our eyes, but we have to use the mic. And Carson said he would even come in and play 80s style. He'll come and hold it for you if we're not doing it. So, yes. What were the old 80s show that
One is not the 80s ones where they touch you. Is there?
Oh my God.
Oh no.
Kiss you.
More. Oh, that just made me cringe from the top of my head to my toes. Thank you so much for that.
See that guy.
Okay, no touchy. Let's talk about the bank transaction and the bank workflow. Where do I want to go? Where do I start if I want to look at my banking in QuickBooks? There's a couple of right answers, so just you tell me where you would go.
I just bring up the dashboard.
For the sake of the person wearing the mic, I'm going to repeat what you said, not because I'm like being condescending, but you said from the dashboards, which you're right, absolutely. And we did talk about that. So dashboards, we can manipulate this. If you're not seeing your bank feeds here, we can make it show it there. Wow, English is hard today. We can make it show, make it so. Yes, so this is one. And this information is going to be exactly the same as what we find in the banking feed, but there's a couple different areas too to find it. Where else would we go?
Can you go in this chart of accounts and find it?
Ooh, I have not heard of that way, but actually, no, you can't. You can go find the bank register itself, but you're not going to see the transactions, like the non-posting transactions. More on that later. Where we're going to go is over to navigation menu. So, and this is one of those things, this is like one of those pro tips. I've talked about making the bookmarks, right? Hands down, one of the first bookmarks I make is bank transactions. So in the new consolidated menu, which we were kind of just talking about a second ago, it's going to be listed under transactions. If Amanda hovers over transactions, you can see that this is going to create a sub-menu. And if we were to click on that, we could see all those across the top, yes? We'll see bank transactions, that's where we're headed. I wasn't done.
Sorry.
You're so jumpy. App transactions, we'll talk about that too. Receipts, reconciling, rules, chart of accounts, recurring transactions, all those things you can see along the top here, right? So to save myself an extra click, I can bookmark the bank transactions. That's going to take me directly to the page that we're going to be talking the most about this evening. And it pulls it straight to the top. That's where you'll spend, if I had to guess, and I'm really good at guessing, that's where you spend most of your time in QuickBooks Online is in your bank transactions. So make it a top priority. That being said, let's look at the bank transactions page and what it offers us. You can connect, and I won't say should, you can connect any balance sheet account. Any account that you could log into some sort of financial institution, whether it be a credit card or a bank, and you can go look at a portal and see balances somewhere. That would include car loans, home loans, all of that. You can connect them. Should you? Probably not, right? Some people think I have to have them all because I don't want to miss the data. The data will be caught because usually those smaller accounts, the home loans, auto loans, you're catching information that's happening somewhere else, usually from like an operating account or like an income type account is feeding that loan somehow, right? So you don't always have to connect all the loans. Nope, all the accounts is the word I meant, but you should connect the accounts that you're seeing the most activity through, okay? That would be your checking accounts. Sometimes that's savings accounts or money markets. Most definitely that's credit cards or lines of credit, okay? You can connect them with this button up here, the link account, not the drop down beside it, but the link account is going to pull up your selection. We didn't talk a lot about this in the last class, but is there any hiccups? Have you guys had any issues connecting your bank accounts? Do you know how to do that? Haven't tried it? Well, let's just for the sake of for funsies, look at what that looks like for you, because this is going to change your life, I promise. This is what QuickBooks Online is all about.
What if I don't have that button?
I have never heard of someone not having that button. You don't have the link account?
Last week I was something, I didn't have a lot of the
Oh,
extra
wait,
little
no.
buttons either that you guys had.
So click connect account. If you're on the brand new page, click connect account. And that will bring you up.
Does it have a pop-up that's like wanting to get you started and give you a tour first?
Yeah,
Is that what it
it's
was?
like- Yeah, it's like a fancy green button. Yes.
Not
It's okay.
Good to know. And yeah,
So you should see this now after you click that green. Okay.
is everybody on the same page now? We're good? Man, I didn't know I was leaving some of you. Do you already have accounts linked? Because you're going to see that if you already have accounts linked too. Yeah.
First is linked.
Yep. So they were seeing it because they don't have anything connected at this moment, I'm assuming, okay? So what it does is it prompts you to find your financial institution, whether that's America First or that's Citibank. You can type in, they connect, you can show more. I don't know if it tells you how many there are. There's way more than what.
There's a lot. You can type it in here.
Yep.
Whatever you're looking for. Really
I don't think I have found a bank yet. Yeah. Anyway, lots of options. All of the credit unions typically do. So you're going to find your financial institution. If it's a bank, you can put in through the secure, and you know that it's secure. I found this out from a tech guy. He told me once. This browser doesn't show you. Oh, it does. The little lockup at the top left corner there lets you know that it's a secure place to put in your information, because what's going to happen next is they're going to ask for your username and password. And you want to make sure you're in a secure portal. QuickBooks is that to log in. If it's a credit card, it will open up a second browser to do that. That's the only thing that's different, and you'll do the same thing. You'll put in your username. It'll link you to their website, and you'll log in through their portal, which will send a notification to QuickBooks, and it will connect the account. The steps usually after that will ask you, would you like us to import your data? And it'll ask you how far you'd like to go back. Depending on what you need to go through for importing information transactionally, that could be as far back as the last tax period when it was closed, so maybe the beginning of this year, January 1st, or maybe because of a broken account, we can talk more about that in a second. You're just, what happened? It's like it went black on me. It could just be really 30 days ago or whatever, and you can customize the date that it's going to pull from. And all it's doing is farming all the information that's on your usual bank feed that you're looking through your own transactions and putting them into QuickBooks Online. So that's what that looks like.
Some of them won't go back more than 30 days, 30 to 90 days too.
It really depends on the banking institution for sure. But there's other ways, and I think we talked about in the first class, there's ways to download from, like you can create a PDF or a CSV, usually from your bank, and then you can import that in batch with the import tool in QuickBooks. So there's options around it. Okay. Once you have linked accounts, I want you to take a look up here. If you don't see blue tiles, and all you see is that, like just says it's checking, let's see, hide the account cards, what that looks like. If yours just looks like this, I'm going to have you change it so you can see the account cards, because that's how we're navigating tonight, and that gives you the most information in a glance. So there's a little blue hyperlink underneath, or an edit button. We want to make sure that we are seeing the account cards. Okay? You can also reorder the accounts. So if there is a more active one, typically it's going to put, like it's going to do like a numeric order. Sometimes savings accounts are listed, especially with credit unions, as like a 01 and checkings are 09. So your checking account's automatically going to go later. If you want the checking account first, because that's where all the stuff is happening, you can reorder the accounts, push the pencil, then you can just drag and drop and put your favorite on top. So the MasterCard, we're going to say, is our favorite, and then save it.
It doesn't change it though.
You didn't push this? You didn't scroll down to save. I swear
It
that
didn't have a save.
I swear there's a save button.
There's not a save. Oh.
It's okay, it's fine.
That might be.
Always push it to save. Okay, so when we're looking at the account cards, we're seeing a few different things. Number one, you're going to see the little bank icon. If you forget where you're banking, you can hover over the little bank icon and it'll tell you. For example, Phony Baloney Company is banking at Example Bank USA. Yours would say America First Credit Union, right? Or whatever account you've attached to it. The next thing it's going to tell us is the last time that it was updated. This feed was updated moments ago. Sometimes it'll tell you it's updated as of a certain date, right? If that time period is not close enough for your liking, the button up here for update will force all of the accounts to refresh and update and sync. It'll pull in all of the most current data, including pending charges. That was asked in the last class. Okay, the next thing that we see is two numbers. We see a bank balance and we see a QuickBooks balance. A bank balance will be brought in from the actual bank, what your bank says you have available to you today. And then QuickBooks will tell you, as far as you're concerned, you actually have this much money in the account. Why should or could those numbers be different? Please use the mic. Sorry.
No, I'm just kidding.
Oh man, Carson.
Nope, just start
Nope.
talking. Carson, it may be different because, say you wrote a check, and so QuickBooks is gonna take that out of your balance, whereas it hasn't run through your bank yet.
Absolutely. Absolutely right. Yep. That is the best example. As that usually, if we're playing the game right, we're a few steps ahead of our bank anyway, right? It's time to run payroll. We know we've got to run $40,000 in payroll. And, well, not this guy, because he can't afford that. But, yeah. So QuickBooks is going to decrease. We'll have run and processed that payroll, but it's not going to come out through direct deposit till Friday. So I'm not going to see, the bank's not going to be aware of any of those transactions, even though I'm aware of them. I'm ahead of them. So that's why there could be discrepancy. I get a lot of very concerned calls from folks. They're like, my banks don't, like the numbers don't match. They need to match. I've reconciled everything and they don't match. Well, it's okay sometimes to not to match. Okay, the next thing we're looking at is a number in the bottom right corner. That number means there are that many transactions to review. We'll come back to that in just a second. So in our MasterCard, there's 7 transactions we have to look over. Checking account has 25, savings has 1. How can I know that the data down here that's just populated is from the checking account and not the savings account? Looking at the screen right now, what's the giveaway?
Is that upper left where it says checking?
Yep. So the highlighted card, right, and the orange number are referencing what's going on down here, which can be confusing, right? You're thinking savings account, like if you just see savings and your brain is on savings mode, even though you're not clicked on that, you could be mixing up your data here. So it's a matter of just being aware of what's going on and what the data is telling you, okay? Below the tiles, we have 3 buttons, which are for review, categorized, and excluded. I think I talked a little bit in this class last week about the difference between posting transactions and non-posting transactions. Does that sound familiar? Maybe? Was that somebody else I talked to? Okay, QuickBooks has what are referred to as non-posting transactions in the system. And they have posting transactions. The real difference being when they're posting, they're hitting your financials. It's going to affect your profit and loss and it's going to affect your balance sheet. Non-posting is just hypothetical. We did talk about that because I talked about estimates and purchase orders. Those are hypothetical. They are not going to hit our stuff, right? Same thing happens for their bank transactions. This, under the for review category, these transactions, all 25 of them, are considered non-posting, meaning not one of these are hitting my profit and loss yet. This is the digital equivalent of a stack of receipts sitting on my desk that I've got to go enter in. Okay? Let's move for funsies, Amanda. Let's say we know about this deposit, the $868.15. Let's match it and throw it over there. Now we can go back up to the categories. We learned this the hard way last time. There's nothing in categorized in the phony company. So this categorized list are a listing of all the transactions we've gone through for review that have moved from non-posting to posting. So this $800 is now hitting my profit and loss. If I push undo, it will come off of my profit and loss and put it back over in the for review. So you see that went from 24 to 25. Okay? That's okay to do. Sometimes we have to do that back and forth, like maybe we go a little fast and we miscategorize things or whatever. When that's problematic, we'll talk about this a little bit later, is when you're reconciled and you're going to break your reconciliation if you get happy with the undo button. So be careful. Okay, then the third button up here is the excluded. There are occasions when, for example, your bank feed glitches and you haven't logged on in a certain amount of time and you have to go refresh your data and bring stuff in, but there's going to be a gap or maybe there's an overlay. So some data came into the for review section that was duplicated. There's no need to keep it in the for review to annoy you. You can just exclude it over here. And same with the categorized, you have the button to undo it. Excluded are also non-posting transactions. Nothing here is hitting your profit and loss. Okay? Okay. Let's talk about the baby gear for a second. Baby gear. Much like the larger settings gear, this one can help you to manipulate what you're seeing here. I highly recommend, if you click on this, the copy bank detail into memo is going to automatically pull everything that matches to your bank statement verbatim to the memo slot on the transaction you're creating. This is going to help reconciliation a lot. This will help your CPA to help verify things. And in general, it's just really helpful information because sometimes after you've categorized something, you forget what the bank said it was because you've overwritten it. So I always like to keep that copy detail in there. You can also, for example, if you're pulling in a lot of data all at once, you can see up to 300 lines at a time, which is going to help us in just a second when we talk about all of the ways to condense the amount of data really fast that we have to go through. So you can turn on grouping as well. That was another question. Grouping will subsection everything, usually into months. So you can go through just June's, just May's, April's, so on and so forth. So it'll help you to see the data in a more organized way. Sometimes that's helpful, sometimes not. It's really your preference. So beyond that, if, for example, I had more than 25, and that number 25 can be overwhelming to some, but I've seen as much as 900 recently to have to go through. That's a little overwhelming. There are ways to help to organize this data to like chunk it, right? I know that repetitively each month there's a T-Mobile bill or there's a Dominion Energy bill or whatever going on. I can go search for those by description, by memo. So if I know that the bank feed usually calls the Dominion Energy, well, in this case, rental, we can say rental. I type that and it's going to pull up everything in my non-posting under or using that filter, right? I could search by date if I wanted to, or I could search certain types of transactions, so just my money in transactions, just my money out transactions. And there's a way I could click on each box individually, or the top one there. I can edit them all in one go, and I can add them with one click. So with 900 transactions, you can pick at those actually pretty quickly, especially because of some of the repetitive things that happen. In this case, because of Craig's landscape, what do we decide the rental was? He was renting equipment. Even though we have a deposit and 2 expenses out, we've decided that was probably a refund. This guy likes to ask for his money back. So he spent what looks like $2,000, but really ultimately it was just $1,800 because he got a refund. This is not income because we don't want to be taxed on it, right? The math is still the same, right? It's lessening the expense, really. But we'd rather have that categorized in the same expense account so that we could see, oh, originally I paid $1,200, but really that invoice was going to be for $1,000. So it'll help you with your planning and stuff in the future. So we'll come back to this, but I want to talk about the 4 dimensions of bookkeeping again. We want to make sure that we include the vendor name in there. Equipment rental is the expense account, or is it cost of goods sold? Either way, it's an expense account. If this were tied to a customer, we could. Tags, did I talk about tags in this class? Maybe. Yeah, we could add all of that, apply and accept, and then they're gone in one fell swoop. So we've gone from 25 to 22 rather quickly. Okay, so here's usually the order of operations. Here's what you're looking at when you're looking at the data beyond that, okay? The very first thing QuickBooks wants to do is match or start to reconcile what you've already done previously. So all that we focused on last week with the entering in the forms, that's going to create for us matches. So you told the bank that you were creating a deposit on 4/26 for $868.15. When the bank feed updates, it's like, oh, I can see that on that date there was a deposit for that amount of money. Is this the same thing? Do you want to reconcile them? And that's what the match is. That's what the marry is, or link, or whatever. The word is going to be match on your QuickBooks. When you do that, what it does is I don't know that there's another term, it's mine really, it's like soft reconcile. So it's not fully reconciled yet, but it's cleared and ready for the reconciliation at the end of the statement period. That's the word I'm looking for, thank you. So when we match, we're going to go through, when we're looking at our bank feed, we want to focus primarily first on the match. That's the information we already know, that we're ahead of the game, right? We ran payroll, so there's 5 transactions, 5 paychecks that just went out. We can go match all those because we already knew that they were coming out. So we'll match those. Then we want to take a look at these boxes here that tell us there's 2 matches found. Looks like $75, if we scroll down just a little bit, Amanda, is kind of a common number, unless we already added it. Nope, down here, see? Similar date range, I mean, they're in the same month, and there's 2 instances where $75 went out. So we can click on that and make sure that we're matching. These are the 2 suggested matches. If we didn't find what we were looking for, we could also look for match. We'll come back to that in a second. But in this case, this information, where did it go? Click out of it really quick because I'm lost. Nope, it is not there. Okay, so the information that usually comes under here, like the deposit for match, this is information that we have created on a form. In these 2 columns, that's coming from the bank, right? So in this case, we're looking for something the bank says came from Books by Betsy. That's not our information, that's the bank's information. So given what we know, the 2 expenses, is it either Pam or is it Books by Betsy? It's the Books by Betsy, right? Because that's the clear match. So once you match that, you go back up to the top, and suddenly this one only has 1 match left to go with, right? So there's no duplication of things. The AI is kind of sorting all of that out for you. So we'll match that one as well for funsies. And then, yeah.
Have you ever noticed that sometimes it assumes?
Yes, let's talk about that. Sorry, I am losing my steam, I think. Okay, so here's what happens in the bank feed, right? We've gone through all of our matches, and what's left is these really outlandish suggestions. Uncategorized income. Who would put that in uncategorized income? So there's a couple different things we can do. If these words are green, what it's telling you is that it recognizes this payee and description coming from the bank before. This is not the first time you've spent money with that vendor as far as they're aware of. They'll put a green suggestion in there if you have categorized using that green account. There's none as an example here, but let's say Books by Bessie was advertising expense, and it'll say in green advertising expense. It's a suggestion. It is not something you have to do. Don't be offended by its like outlandish stuff. If you click anywhere in the transaction line that is not words or numbers, it'll pull up what they call the transaction drawer. Let's talk about what you see in the transaction drawer, okay? First of all, you're going to see 3 or 4 buttons here. The first one's going to be categorized, which gives you the option to change how that's coded. Match, if you're sure that you've added something in with that number before and it's just not showing up, you can force a match. We'll show you kind of what that looks like in just a second. Find a transaction. Usually sometimes things are dated outside of the 90-day scope that they have, and so you have to go looking for it. Excuse me. Then there's record as transfer, which is kind of an irrelevant button now because of the pair that exists, but I'll talk about that in just a second. But record as transfer is going to create a different form. It's going to create a transfer form as opposed to an expense form or a deposit form. And then sometimes if you're in the credit card tile, you'll see record credit card payment because it's going to recognize, oh, I can see your bank account went down a certain amount of money and then the credit card number went up a certain amount. Like it's clearly a transfer from one to the other. Do you want to record the credit card payment? Which is a transfer, but it's a special kind of form that they want you to use. So beyond that, if we had to figure out why we got $55 from Bessie, Books by Bessie on 6/21, it wants to put it in income because why? Just as a guess. Because it's money received as opposed to money spent, right? So already the AI is like, oh, this must be an income. In this case, it's probably not. We've learned that Craig likes to ask for his money back. I think he spent money at Bessie's and was asking for a refund. So again, similar situation like with the rental. We don't want that to go into income because we don't want to pay taxes on it. It's not income to us. It's a reduction of expense. So even though this is going to make a deposit form naturally, if I use the vendor and I do an expense, it's going to create a negative expense form instead. A different form, same math. Does that make sense? Okay. So we're going to say it was advertising. Yep. Where is the other? Well, we already added the Books by Bessie stuff, huh? The $75. It looks like it was only, oh, there's the $55. Maybe we paid twice on accident. So either way. Okay. You can change that though. The green is just a suggestion, and it is not, the only reason that word is there is because it's trying its best to guess. It wants to save you time. You'll also notice, and we'll talk more about this in just a second, Amanda's going to talk about it, it's going to start just suggesting things like, hey, I can see that you're doing this the same way every time. Would you like to make a rule? Usually the answer to that is no, but we'll talk about that. You can categorize, let's do the roof. Let's see what it looks like to find a match, to force the match. This is what happens with the force a match. It's going to pull up transactions within a date range, and these would only uncleared transactions will show up here. So already things that are not being matched somewhere in the bank. So that helps. And like I said, most of the time when I'm expecting to see a match and there isn't one, it's because my dates are off. Either out of that 90-day window that they have up there. That's only a 30-day window. But, or dated with the wrong year, because fat thumb happens all the time. So you can find it, click on the box, whatever it is, and then force the match here. So that will soft reconcile. What am I missing? I feel like I'm missing something.
Talk about this.
Ahaha. Yes. Okay. So on the bottom of the drawer, we have the ability to add an attachment. We're actually going to talk about a faster and easy way to do that, but the IRS does, for compliance purposes, usually require us to have proof of purchase, right? So we're going to put some sort of receipt, whether that's digitally sent to us, scanned in, whatever. You can create a rule from here if you don't want to follow the prompts with the push notifications that it gives you. Again, the real rule with rules is if a rule can be broken, it's not a rule, because an AI doesn't understand exceptions to the rules. So, but we can talk more about that. This is another way that you can exclude, right? And then categorization history is a really cool tool. If you can't remember exactly what it is you're supposed to put for Hicks hardware, like maybe it's job supplies, or maybe it's cost of goods sold, whatever. You can take a look at how you've categorized things in the past. I have a lot of people who get hung up on, what if I coded that wrong? Like, what if I made that the wrong expense? And that's really not the concern that we should have. What we should be more concerned about is the consistency of our coding. So long as the same thing, it's coded the same way every time, it's okay. I've mentioned it before, probably at the beginning of the class. Our profit and loss is very simple, right? We make this much money, we spend this much money, and at the end of the day, what the CPA cares about is that bottom net profit number that we're taxable on, or reliable for. You could call your expenses whatever the heck you want to. Red expense, blue expense, green expense. Probably not helpful to him. You won't know what to do with that. There's other ways to strategize and to play with those things. But so long as you're always coding it to the same expense, you're going to be better off. Doesn't matter what you call it. Does that make sense? So don't get hung up on, I coded that wrong. And we'll talk about, before the class is over tonight, kind of how to find those errors and to make sure that you are staying consistent and clean in that regard. So, okay. Any questions? All right. I'm going to let Amanda then take over for a minute and talk about apps and receipts and rules. Yes. I was like, where are we going?
Okay, so are there any of you that use Square in your business? Use Square. What about Amazon Business? Do you have an Amazon Business account?
Yes, but I haven't really.
Haven't done?
I've not connected mine.
Okay.
I know it always says like do the thing for the tax break, but I never.
Okay, well, so we're going to talk a little bit about that. So our app transactions here, this is a really cool feature that we've used a little bit with some of our clients, and we've found that Square and Amazon Business are our two favorite ones that connect very smoothly, and we absolutely love it. So if you use Square within your business, and it looks a lot like, kind of like the bank transactions. So it's going to have a tile there that's going to say Square, and then it's going to have the list of the transactions underneath it. So you can go through each one. So my recommendation, if you have one of those, start here before you go to your bank. Start with your app transactions, input all of your Square, because what comes in here from Square is going to be how much you charge them and your Square fees. And then once you accept them here, it's going to put everything into your books the way it's supposed to be. So you don't have to worry about those fees. You don't have to worry about anything like that. And then it's going to match to what is deposited into your bank account. So it's going to be super slick. And same with the Amazon Business. It's going to bring in your POs or whatever that you have, not POs, but your statements, your orders from Amazon, and you can categorize them from there. So it's really cool, and it's really nice you don't have to go and find stuff online. You don't have to try and hunt down all of those receipts and stuff. So it's really cool. But always start here before you go to your bank feed, because then things will match in your banking and you won't duplicate stuff. So receipts. Okay, so we've talked a little bit, I think, about the QuickBooks Online app, which is really great. We have some people that use it for estimating out in the field, or for sending invoices. If they've completed a job, they need to send an invoice right then. They do that. Other than that, it's really not a huge help, or you can't pull reports very easily. It's not very user-friendly, I guess, except for in those couple instances. One of those is with receipts. So if you have receipts, you have the app on your phone, you're out in the field, snap a picture of that receipt before it gets lost in your car or somewhere on the way to the office, right? And it's going to pop up here. So this is really cool. You can also from here, you can drag and drop it from your computer. So if someone emails you an invoice or something, it comes in as an attachment, drag it and drop it right in there. And it will come up here. You can categorize it from there. You can put it in. It's really cool. You can also, if you have a Google Drive and people are putting everything into your Google Drive, you can pull it from there. You can connect to Google Drive. You're also allowed one email through QuickBooks where people can forward to that email any receipts or things like that, and it will come in as well. So there's those, and we'll talk about this in a minute, like when you attach to an invoice. We went over this in the last class, I guess. When you put in an invoice or a bill, when you put in a bill, so an invoice from a customer, there's that attachment placed in the bottom. So I had someone ask, well, what if I only pay once a month? And so she gets all of these invoices that come in, and then she just pays once a month. And so the answer to that is create one bill, but add in all of those invoices as attachments. So you have all the invoices together, but you're just paying one bill that's going to reconcile with your bank account. Does that make sense? So you can still add multiple attachments to the same thing. So anyway, that's a little diversion. So here is kind of similar to our bank transactions, right? We have a for review, and then we just have a reviewed. So when you have receipts here, it's going to show a list of receipts, tell you it's a receipt. It will tell you who put it in. So if you have multiple people that have the app and they're putting it in, it will tell you who put it in. It should populate a date. So if the AI is seeing everything that it needs to on the receipt or the bill, then it should populate most of this stuff for you. So the date should be there. It should have a description. It'll have a payment account. So if you're paying with a credit card, it should hopefully detect that account number if you have that bank account in your chart of accounts, based off of like the last four numbers, right? Because that's kind of what we go from. It would have an amount. Sometimes it pulls the right amount. Sometimes it doesn't, and that's okay. And then it'll try to guess a category, and if it doesn't, it will say, I can't remember what it says. It doesn't say anything. And then we have an action. So this is where you're going to be looking here. And I believe, what does it say? I hate that they don't have this in here. I think it's a review. So it's a yellow button or yellow words here. So you come over here and click on that, and it's going to pull up a picture of the receipt and then all of this information. And then you're going to go through and make sure all that information is correct. You're going to click the next button, and then it will ask you if you want to make it an expense. And you can click yes. Or a bill. Expense, bill, those two. And then from there, it should attach to what's in your bank transactions. So you can go and match it from there. So it also kind of does it the reverse, if that makes sense. So if you come into your bank transactions and you have a match, and you look here, it will say receipt, and it's already matching to what is in your receipts. So sometimes that can happen too, and it'll help you connect them that way too. So there's those two ways. But if you're not finding them, go into the receipts and start there and create an expense that is then going to match.
In all of these cases, that we're talking about here, where we're going through bank feeds or app transaction feeds or receipt feeds, what we're doing is we're pushing that information we've already collected, like a proof of purchase, right? And we're creating the forms we've talked about. So there's like good, better, best. Good would be, let's go put in forms ourselves. Let's do manual data entry. It works, it's time consuming, but it's going to be accurate. Better would be finding your proof of purchase through the actual source itself, right? Or receipt. And best is making sure that that's connected in there so that when we're consolidating everything, because that's what's happening, right? We're managing the data from a view of the actual proof of purchase already attached, and the bank feed's going to reconcile that. It's going to marry all of those things, consolidate the information together, so that one transaction card or form that we've created is going to have the attachments, it'll have the right date, it's going to have everything that we need for reconciliation and compliance purposes. So all of this is to create the forms we talked about last week.
Any questions on those? Okay, so the next one we're going to look at is rules. And like Marilyn said earlier, our rule of thumb is if it is not going to be the same 100% of the time, do not create a rule. We have cleaned up many books that because of the rules, things got categorized in the wrong places. They got categorized as income, or they got categorized as cost of goods, and they really weren't. So that can really, really mess with your reports at the end of the day. So, we say, like, if you think about Dominion, or, maybe T-Mobile or Verizon, if you have those pretty much are the same 100% of the time, right? You're paying for a phone or you're paying for a utility. Those ones are good to put as a rule if you don't want to have to go in and categorize them, or you don't need to split them or anything like that. Just put them in as a rule, and then it will automatically assign it for you. So you can come in and create rules. So we want to name it. So if it was Dominion, we would name it Dominion. It would be money out, so we're going to make sure it goes money out. Depending on what account we actually are paying that from, we can put all bank accounts, so it's looking through all of your bank accounts to find that. Or if you know it's only going to come out of one bank account, you can put that specific bank account there. And then you can add any of the descriptions if you need to. You can test that rule, so once you put this criteria in, you can test it. I'm not exactly sure what that does. I don't ever test my rules, so I just put them in. It's probably kind of bad, but. And then you can also add in some other categories. So you can add in what type of transaction. So these are all the types of rules that you can apply to the books. You can add a category, a payee, if it's going to go into that. So you probably need to add a payee if it's Dominion. You want that to show up in the feed on that one. If it's going to be assigned to a customer, you can assign it to the customer. You can create a tag on it. I think you can create a class on it as well if you have classes. And then this button here, so auto add here, you can do that. It will, if you have the auto add on, you will never see it come through your bank. It will just automatically go in where it's supposed to go. That's okay in some situations. Otherwise, if we don't have this clicked, if it's turned off, it will show up in your bank feed, but it will say it has a rule on it. And then you can just add it knowing, okay, the rule is fine. So it depends on if you want to see that transaction come through or not, is what your auto add. I can't speak either.
I'm a proponent of not. I'd rather see my data, every piece of
And
it.
check it.
So,
Yeah. You can always add new rules here with the new rules. Like we said there, I don't know if we said in this class. So in your bank transactions, when you're going through and categorizing those things from your bank that you need to, sometimes it will come up with a box afterward and say, oh, you've categorized it as this. Do you want to make it a rule? Be very careful about that. That's where I get so many people that are like, they just click the box and don't realize that they've created a rule now. So be very careful about that.
You can disable rules and delete rules and stuff from the
Yeah.
function column here if you found that you've
For
added
sure.
something maybe you didn't mean to.
Yeah.
What is the difference between a rule and a recurring transaction?
So difference between rules and recurring transactions. So rules are going to come directly off of your bank feed. So it's going to find what is coming through on the bank. Recurring transactions are something that we put in, and it's going to create a form for us. Yes, thank you. On a certain date, or something like that. So I have a client that I work with that I just know that the 5th of every month she has a Verizon bill that's going to come out, and so it's this much. And I don't do anything through their bank transactions. It's all manual. It's really bad. So I use recurring transactions a lot with them because then it automatically comes in. I can change the amount if I need to, and it's already in there. I don't have to worry about it because there's some bills that I just don't see. And so it's good to do that for the recurring transactions. But any questions? We're good, 100%. Maybe.
What's the difference between a posting transaction and a non-posting transaction? Transaction and a non-posting transaction.
Isn't non-posting that doesn't really hit your money, it's like an estimate or,
Yep, exactly. Non-posting does not hit your financials at all. So that could be in the banking world here, that's your for review data or your excluded data. In forms, that's your estimates and your purchase orders. Absolutely. Yep. Okay. Any hiccups or problems that you've had with the bank feed that you don't think we covered today? Because we're going to move on to the reconciliation portion after our break, which is where it all pays off. It's that reconciliation button. Okay. I don't. Not yet. That's pretty accurate. Okay. All of this leads to the reconciliation portion. So, the IRS requires that we have, well, not the IRS, the CPAs, I guess on behalf of the IRS, require that all of our information is validated and reconciled. We can say that we have spent and received X number of dollars, but unless there is a financial institution that can back us up, meaning if the bank didn't say it happened, it didn't happen, right? Then our information is unverifiable. So what we're trying to do monthly at a minimum, annually can happen too though, is to verify our data against some sort of financial institution. Our banks, our loan vendors, etc. So every account I mentioned before on the balance sheet can and should be reconciled. Not all of them should be attached, but you should be reconciling all of them. And all of them should give you some sort of statement. Again, the minimum is annually. And some accounts that have low activity, like I know some money markets will only give you statements per year, once per year or once per quarter. But most banking, checking, business checking accounts will give you monthly statements. If you're lucky, those statements usually run from like the first of the month to the last day of the month. So it's a fiscal month. Sometimes it could be stuck in the middle of the month because it's just for funsies. Credit cards, for example, when you sign up for them, they'll typically issue you credit on a certain day, and that's the beginning of your bill period or your whatever else, your statement period. That's what we're looking for. You can call and you can adjust that. It is possible. I've done it before. It's just phone call and talking to somebody. Super helpful and who knows where. But it's possible if that's something you're kind of particular about. Here we have an example. We've redacted, kind of, sort of, of a bank statement. So I'll pass around in just a second, but every bank statement, every statement in general that you're receiving should have 3 pieces of data. That's like the minimum to make a statement. Number 1 is a statement period. It's going to have a beginning date and ending date. Again, if it's a monthly period, it's going to be the first of the month and the last of the month, or whatever the 30-day cycle ends up being. The second thing it's going to have is a beginning balance, so where the last statement left off and tied out to, and a new ending balance, where the bank or loan amount sits as of the closing date on the statement. And then the third thing it's going to have, it has to have actually, is proof of what changed the number from beginning to end. So all of the transactional history, these transactions in, these transactions out. If your bank is really helpful, sometimes they'll help to organize that in a way that makes this reconciliation process just a little bit easier. For example, they'll put all the deposits in one place and all the expenses in another. America First is not like that. America First, you have to go like by the timeline. It drives me bananas. I hate America First statements. Also, what can be helpful is a statement will give you, in a period, they'll give you a total amount or a total number for deposits and a total number for withdrawals. So that if when you're looking at your reconciliation and something's off, if one of those numbers match, you know the problem is with either deposits or payments, right? You can kind of narrow those things down. Those would be helpful statements. So I'm going to pass this around. Again, if you've not seen a bank statement before, this is what one looks like. The pink information is what we're going to be using, withdrawing from on our reconciliation form. There are 2 places to find reconciliation. Where would those be? Yep, up here in the tab we have the reconcile option. Very good. And also it's considered in the top right gear. Very good. Something stuck. It's considered a managerial or administrative thing because you can be closing out your books for whatever else. So anyway, it's listed under the tools in the top right gear. That didn't come out of my mouth right, but yeah. Okay, get started. So what QuickBooks is going to ask you are 3 different pieces of information. Number 1, which account are we talking about? So in this case with the phony baloney company, we're going to talk about the checking account. But again, all of our balance sheet accounts, all of our assets, all of our liabilities, our equity accounts, those can and should be reconciled, okay? So we'll pick the right account there. You can see that it's offering me a beginning balance, and that is uneditable information. This number should match the beginning balance on our statement. Why is this uneditable? Why couldn't I enter that number in?
Because that's what you reconciled the month before.
That is what we reconciled the month before. Absolutely right. It's already done and closed, right? So we shouldn't have to edit it. If that number is different, what does that mean? If that number is different from what I'm seeing on the statement.
Like when you did the thingy where you
We did an undo.
changed a transaction, which unreconciled it.
Yes, we undid something that was reconciled. So something in that closed period, which in this case, since we're going to be reconciling April 1st to April 30th, anything that happened before April 1st is considered reconciled, right, through the statement, through the process we're just about to show you. If I were to change any, like one of these two things, number one, the balance sheet account it's related to. So if I said, oh, that was actually a savings account transaction and not a checking account transaction, and I move it, that will break my reconciliation, even if I move it back. If I move it at all, that will break the reconciliation. The other way that I can break it is by changing the amount, even by a penny, and if I change it back. Changing that at all, those two things will break your reconciliation, will adjust your beginning balance entry for the next term that you're doing that. What will not, this is a really good question and something that you need to not be afraid of, changing the category, changing the expense from one expense to another expense, or even an expense to an income, is not going to break your reconciliation. The only two ways you're going to break it is changing the balance sheet, account it's affected, and the amount. Okay? If I came in here, we'll come back to this, I promise, but if I came back in here and my beginning balance did not match my bank statement, I could come up here to this button, the top right, that says History by Account. And had we ever reconciled this account? We haven't, because it's a phony. I thought it saved from before. Didn't we not log out?
I like it.
Lame. Okay, fine. It will tell you the history of the statement ending date, so that's going to match your bank statements. So the last date we should have reconciled to would have been 3/31. It'll tell you the date that it was reconciled on by you. Excuse me. I bruised some ribs and coughing. Not fun. It'll tell you the ending balance and any changes that would have happened in since the last time you reconciled. So there, if we saw the difference of, like that said we were starting with $4,000, it'll tell us a change of negative $1,000, right? Because the beginning balance is off. Here in the action button, you'll see a view report, which will allow you to see exactly what was deleted, what was changed. This is actually a lot more helpful than desktop used to be, because you can actually narrow down the changes, fix them. What is different between desktop and QuickBooks Online now, though, is that you don't have the power to undo reconciliations like you used to. Only accountant users can do that. But you can create what we call a one-off reconciliation. We can fix our ending balance. So if I know, and I put it back, or haven't yet, but will put it back, to readjust, what's the words I'm looking for? The beginning balance to be $5,000. I'm going to run a one-off reconciliation, put the ending balance in as the $5,000 that I need it to be in the beginning slot, and all I'm going to do is reconcile that one transaction that was off. I don't have to go re-reconcile the entire month. I just do that one transaction, and my beginning balance is fixed for progress. So now we come back to the statement. The ending balance on the statement, which we're not going to, because the statement doesn't match, but for the sake of, it's not going to match this. That was just phony baloney. Also, and we're going to say that we're reconciling through April 30th. So here's what we see in the reconciliation tray. Number one, we can see the statement ending balance. That is the number we put in. And you can see the statement beginning balance, right? That's the number that was generated from the last reconciliation report. QuickBooks will also tell you what is cleared. That number up at the top right, the 2307, you can see down here in the data, there are some transactions that are already reconciled. This is what I was referring to as the soft reconciliation. We've gone through our bank feed, we've done all of our due diligence there, and matched it or married it. That's what these little green boxes means. They've been matched to transactions already. The bank doesn't need us to tell it more than one time that, yes, this actually happened, right? So because all of these boxes are currently checked, that's why we have a cleared balance of 23,2307. If Amanda were to select all of these, by pushing that little button right there. I don't know why it's so picky about, are you sure you want to select all of these? Yes, I'm sure. And let's deselect them again. We can change, our number went from that to now we have 5. What's cleared for 5,000?
Nothing. 'Cause I just
Okay.
did everything.
Oh, but it's telling us a cleared balance. Okay,
I don't know.
that's weird. What you're also seeing down here is a total number of payments. So like I said, sometimes the statements that you get can be helpful to tell you that you have this many statements that equal this amount of money, or this many payment withdrawals that equal this amount of money. You can help to determine where your discrepancy is. If it's telling you you have a difference, it'll help you to narrow where that difference is. Here in these buttons, you can filter this information to see just payments. If I know it's a payments option or payments problem, I don't want to see all the data. I just want to see the payments. And I'm going to go through line by line and check against my statement to say, oh, okay, yep, 250 happened, 54.55 happened, 38.50 happened, and check them all one by one. Same with deposits, or the all will show you all the transactions mixed together. You can also mix up this information if you want to. If you want to go by date, you can just push the date button and go top to bottom. You can go by account, you can go by payee, reference number. Like sometimes some statements will give you checks all at the end. So you can go through all the checks all at once by hitting the reference number, and you can see them all in order here and go through them pretty quick. It is pretty cool. Another thing you can do is change it by amount. So if I touch payment, I can organize it from top to bottom. So if you're looking for, sometimes my brain just works better with looking at numbers in a sequential order, and I can find them easier that way. It'll split up your payments and deposits that way as well. However, this is still the long way to do reconciliation. If you've done all the legwork beforehand, if you've done all of the form entry or receipt gathering and categorization that way, and you've soft reconciled every one of those transactions along the way, reconciliation can take you as little as 60 seconds and you're done. Done. Yep. Because you've done it all along with the categorization, as opposed to doing that. I mean, that was the bookkeeping process. That's why people like me had jobs back in the day, is we would all put the information in and then we go verify all the information we put in. Now we're doing it in a consolidated way with QuickBooks Online. We're doing it all at the same time, which saves us all time and headaches and swear words. The accounting has taught us. If we've done everything well, this is what it looks like. You get this beautiful green check mark with a $0 difference, and you can push finish now. Can you finish a reconciliation even without that green check mark? Yes, you can. It will, however, create an adjustment for you called a reconciliation discrepancy expense, which will show up on your profit and loss, and your CPA will wag his finger and say, that's not right, and make you fix it anyway. So don't save yourself, or save yourself the headache and just fix it then. Now we have a history by account because we've actually reconciled. You can see their ending balances here. Since we have done it 2 minutes ago, there's been 0 changes made to it, but we can view the report over here if we want to. If there were changes, that would be listed right here in this section. It'll show you the statement that you've put in, all those balances, and changes will be listed first before the other additional information. It will list things that were reconciled first, and then it will leave unreconciled transactions last. I highly recommend attaching your bank statement. You're already getting a PDF of it somehow. Doing this helps to consolidate a lot of the time that you're working with the CPA, because they're going to need to verify. I mean, they're under the impression that you're just going through and just checking things willy-nilly, and you're lying about stuff because that's what their job is, I guess. So proving that this does match up to the bank statements, they have to have that information. If they're a good CPA, anyway, they'll have to have that information and check it anyway. You might as well give them everything all up front in QuickBooks. Everything is already there. They have access to it, so beautiful. Practices with reconciliation, one of the things I highly recommend that you do before we jump into the report section side of things is always check the unreconciled transactions before you go through what's being reconciled for that month. Or before you push that, you get that $0 difference and the check mark and you're good to go. Go see what's unreconciled. Let's go back into the reconciliation screen. We got to pick May 30th now. No, okay, fine. That's true, we didn't reconcile anything because we wanted to get the $0 difference. Notice over here, okay, so we have the dates. These are the dates that we've entered in based on transactions coming from the bank feed or forms that we've put in. This cleared date then is going to be linking to specific bank transactions when it cleared the bank itself. So if there is no data here, that usually means the bank has no evidence of it, right? And I can go through before I even start reconciliation, I can filter by the payments and I can go see where there's maybe duplicates. Like, well, that wasn't duplicate. I thought for a second there was two 24s. There's two 75s, right? So if that happened to have said books by Bessie as well, I would know that's probably a duplication. It's an easy way to spot that and to remove the one. To avoid it, delete it, whatever you need to do. But I'm also going to pay attention, like I said, to everything that's not cleared. Is there a reasonable reason? Jeez, English is hard. Is there a reasonable reason that it's not reconciled? Is it a check sitting in someone's front seat that they don't even remember that is there? Do I need to issue a stop payment, right? Or is that a duplicated payment? Maybe I already paid it and it came out in two different forms, so that's why it's not showing up here the same way. We want to make sure that we're always clearing out those suspicious transactions that are sitting. They're affecting our QuickBooks balance. They're affecting us as far as telling us how much money we have to spend, when in reality, that may never clear, may never actually affect our bottom line. So look at those transactions too. It's not just about checking off what came through the bank, but also investigating what doesn't clear the bank, right? Good practice. All of this leads to, you missed all of the good stuff, man. Gosh, no, I'm just kidding. This leads us into reports, right? So once reconciliation is done for the month, we've reconciled all our balance sheet accounts. The next thing that I highly recommend you do, the profit and loss is not just for your CPA at the end of the year. The profit and loss and the balance sheet and the cash flow statements are for you as business owners, as partners, whatever. It's helping you to make the informed decisions. So I want to teach you a little bit about how to read those reports, because I feel like that's a lot of the information that tends to be missing, keys missing for business owners. So where do we find our reports? In the report center. You're right. I ask easy questions because it feels good to give the answers. Also, I need a break from talking. Okay, so the favorites that are automatically listed here, and they're favorites because they have these little green stars. We can search through the 50 plus, I love that, the 50 plus options, and we can favorite whatever ones we want. Maybe we really liked unbilled charges, and that becomes a favorite. If we push that star, scroll back up to the top, now it's in my favorites list. Or don't scroll to the top. Yeah, it's okay. There you go. You can customize this as well. We're going to talk in a second too about custom reports. You can see up there there's standard reports, custom reports, and management reports. Customized reports are ways that we can manipulate these to be specific to us and answering the questions that we're asking ourselves. But let's talk first about the balance sheet. You'll remember from week 1, the balance sheet equation behind the scenes is that all of our assets are going to equal to or balance with all of our liabilities, so all the money we owe folks, plus all the money that we've put in and taken out as owners. Liabilities plus equity, okay? Those numbers are always going to match. So you can see here on our Craig's balance sheet, whatever, that here's the balance line. Total assets equal 21,611.91, and down here 21,611.991. That's the total of everything together. Because this form is using accrual basis accounting, we can scroll back up to the top, Amanda, you can see the accounting method here is listed as accrual. It's going to include accounts payable and accounts receivable. Accounts receivable is considered an asset to you. Should you keel over dead today, your business partner has the ability to collect everything in the business's name that's outstanding. That's accounts receivable, so it's an asset to you. Your business partner is also liable to pay off all of the liabilities that are owed before the business closes. That's accounts payable. It has to be paid to be balanced out. So that's why it's included. If I ran that by a cash basis, accounts receivable, accounts payable would not be there. Okay. Any questions about the balance sheet? One thing also to remember about the balance sheet is that it is not a date frame. Even though you can put in, say, I want to do this from Jan 1 to 12/31, a balance sheet is considered a snapshot in time, right? As of this date, so as of May 20, whatever today is, May 22nd, this is what the balance sheet looks like. Tomorrow that could change because maybe I'll deposit more money into the bank or withdraw money from the bank, right? So it's considered a snapshot. It doesn't take necessarily a period of time, even though QuickBooks allows you to think that's happening. It's mostly concerned about the last day on that form. A profit and loss and every other report in QuickBooks looks at a period of time. So we're going to set a beginning date to ending date. Let's talk about a profit and loss. Okay, I scroll up to the top. Let's talk about the drawer where it allows you to manipulate the reports. This exists on every report. Number one, it's going to give you a report period. I think the default is like the last 90 days, but you can change that to anything you want in the prefab dropdown, or you can customize the dates yourself in the two boxes to the right. Let's put this year. Why not? This year, let's see what we've done. You can display columns by total only. This will talk about what this is going to show, and I'll show another way to do this. I don't like the display column box, but this will change what we see over here. A lot of CPAs, especially when it comes to like balance sheets, and you, for example, in the profit and loss, are going to want to see a comparison. How am I doing this year versus last year, right? I haven't really changed a whole lot, but we can change the compare period here in the drop down. Previous year, you can do percent or columns, which will show you percentage changes. So you increased in this category or decreased in this category by percent of the total, percent of income, percent of expense, however you want to do that. Okay, run report. See, so now you've got this filtered out. Let's turn off this filter really quick, and I want to show you columnization in the, thank you, Amanda. Also, remember, you're always going to want to push run report. You could go push all the fancy magic buttons, but unless you push run report, it's not going to refresh. Up here, we have the customize button, not the save customization, but the customize button. That pulls out a more like highfalutin drawer that allows you to do essentially the same things plus some. So this top section allows you to do the same stuff, right? Report period, pick your basis, pick your, I mean, you can actually, a lot of people like looking at decimal points, so they just want to round to the nearest dollar. You could do that if you wanted to. Here's the column display by. This is one of my favorites. Let's display by months. And just run the report really quick to see kind of what that changes. Aha. So here, obviously, because we're in May, we don't have any data for June going forward, but we can see months side by side in comparison. Really helpful as far as noticing trends, right? My favorite way to run a profit and loss. And because it is my favorite way, we're going to save a customization. This actually already exists as a customized report, but this is how we're going to do it, just to show you how to do it. We can name it, again, most of these names in QuickBooks are just for internal use. We can call it profit and loss by month. You can add it to a group if you've got a certain group of reports you're creating, or share within your team in QuickBooks Online if you have multiple users. And then we're going to save it. Okay, I'll show you where to find that in just a minute. But it breaks out all the information. On any report, balance sheet, accounts receivable, summary, profit and loss, all of these numbers are a hyperlink. So if you hover over this 150150, we can drill down to see what is compromising. Nope, that's not the right word. What is compiling that income? And you can see that it's coming from an item, particularly from the job materials from landscaping services. And you can see each form and the date and the reference number that it's comprised of. That's the word I guess I'm looking for. Okay, so the other thing I want to point out about the profit and loss, let's take away the monthly, let's just make it very simple again. Oh, nope, let's talk about filters. Filters allows us to, I did talk about the 4-dimensional, 5-dimensional bookkeeping, right? So 2-dimensional is like a date and an amount. That's the bare minimum you need for compliance purposes to say that money thing happened. We also, in QuickBooks, and I've been a proponent of this since the beginning of the class, I mentioned it a couple times, but anytime it's asking for information, we want to put it in because this is why. We want to be able to find the information later in a report. So always putting a vendor, I told in the last class, I used the example, like maybe you have a sick fascination to know how much you've spent at Arby's, right? You have to have included Arby's as the vendor in every case to go see in the Arby's vendor file to go see how many times you've done it, or to run a report based on a vendor from Arby's. You can filter that out if you have that kind of fascination. But without those pieces of information, you can't filter it. So anytime it's asking for that stuff, tag groups, classes, vendors, anytime it's asking information, put it in so that you can run clear and concise reports. So in this case, we just want a customer, filter by a customer, just to see, maybe I only want to know, I know that I've had 2 really big jobs in the last 2 months, Amy's Bird Sanctuary and Cool Cars are my big customers. I want to see how much I made just off those 2 jobs alone, okay? So we had our number, you can see those numbers have changed. Obviously nothing happened in January, February, but March and April, we had that happening here. And this is going to filter the report to show only what happened based on those customers, both income and expense. So if I've entered in expenses and I've tagged the customer to be Cool Cars, it's here. If I didn't, it's not. Income is automatically, if I go click on that 2175, I'm going to see all of the invoices related to Cool Cars and Amy's Bird Sanctuary, right? And nobody else is in here. So it's pretty cool. Pretty cool way to like filter your information and answer your questions. Now we can go to the consolidated, like just the simple profit and loss. So you can go to just total only under display columns.
Reset button.
Where is a reset button? They don't have it. Feedback. Display columns. Total only. Okay. Run to report. Okay. Oh, it's still filtered by the customers and jobs. Okay, so I lied. I fibbed. When I told you that the simple math equation for the profit and loss is money in minus money out equals bottom line. And that's not the case. So I want to talk a little bit about these subcategories, which may not show up. You're going to have to show me the stand by. Okay. So the very first thing that's listed are your income type accounts. We talked about that in the first week, the chart of accounts, right? So your direct income from services and products are going to be listed here. Okay. That is totaled here in this total income. Yeah, here it is. The total income line. So all of these things that we've done, all of the products and services that we've mapped into, oh, that's what we did. I didn't mention that in the review. We did talk about products and services. Have given us $10,000. So I think in this class also we talked about the cost of goods sold, right? Cost of goods sold are essentially, it was like, I used the example of the golden toilet, right? P. Diddy wants us to come and install this $10,000 bathroom, but $8,000 of that install is actually the toilet that he wanted us to buy custom for him, right? So technically off that job, I'm only making, my income margin really is only $2,000. So that's why in the income section, they list of cost of goods sold. We've talked a little bit about the difference between cost of goods sold and expenses. Is that clear enough, or do we want to cover that at all? Cost of goods sold are specifically related to the job itself. You wouldn't have made that purchase had you not made a sale first, right? I'm always going to go buy office paper because even if I'm not selling $10,000 bathrooms to P. Diddy, I still got stuff to do with office paper. But I'm not going to go buy a bunch of golden toilets because there's only one P. Diddy and only one golden toilet, yeah? So that really is the big difference between cost of goods sold and expenses. So we're going to list our cost of goods sold, and it's going to give us a gross profit. That's going to be adjusted down, obviously, from the 10.2 minus the 400. We're getting like that 97. That's where we're getting that from. Then we're going to list expenses, the run-of-the-mill, super simple expenses. That's your jobs, your office supplies, your rent, your food, your fuel, those things, right? And you can have, this can be as detailed as you need it to be. We've talked about that, I think, in the first week with the chart of accounts. Make it make sense to you and your business. What are you tracking? What do you need to know? What key indicators are you following? Okay? Then you get a total expense number. Then it's going to give you what they call the net operating income. That's going to be total expenses minus your gross income, your already adjusted income. Okay? Then, because it's not confusing, there's other kinds of income and other kinds of expense you can get that aren't considered primary income and expense. Typically, that's interest related. You're paying interest on credit cards. That's a different kind of expense that has nothing to do with the business operations. It's just, it exists because you have interest. Same for earning interest. The whole 12 cents that they put in your chart, like your bank account at the end of the month, that's income to you, but not because you did anything special. You just put money in the bank, right? So that's going to be listed in the other income after other expenses. Those two figures added finally get you your net income. That's how you read the profit and loss. Is that helpful? A little bit, hopefully. Okay. Any other questions about reports? How many of you know how to read an accounts summary or an accounts receivable summary? Do you know what that report looks like? Let's go talk about that. It's super fun. It's another one of those favorites that pops up. Okay, accounts receivable summary. Most important reason that we're in business is to make money. And if people aren't paying us, we're not making our money. So the first thing you're probably going to like farm out, right? People, like, because you can hire extra people, is to work on your collections. This is going to show us everything open. These are all unpaid invoices. Not one of these is paid yet, okay? And what it's going to do is list them in a priority order. We have current, so all the invoices currently open, not due. That's why those due dates are really important on the invoice. They're not paid, but they're not due yet. Overdue or due between 1 and 30 days ago. and then 31 to 60, whatever, so on and so forth. So if I hand this list off to somebody, their first priority, the first phone call that they're making is to whom, you think, based on the data? Red Rock Diner. Yep, they're the most delinquent here, yeah? And then it really is your priority, right? I'd be most concerned probably about, even though it's current, there's $954. That's a chunk of change right now for somebody who said they were $3,000 in the hole in their bank account and like to go collect. In total, I got $52,000. Nope, that's less a zero, $5,200 that I could be collecting that would solve that bank problem, right? And this is how I would attack it. So reading this report can help you to prioritize, collect your money. We did talk last week a little bit how you can automate some of the collection process. You can have QuickBooks remind your customers that they're kind of deadbeats and need to pay you, right? There's a due date for a reason. It's not a suggestion. So, yep, that's how you read that report. Let's go look at what the other report options have. So they've broken everything up into your favorites. You can customize this how you need to. Business overview is going to give you the basics for the profit and loss. Again, you can do profit and loss. They already have a profit and loss by month. We created a favorite one of that. I'll show you that in a second. But they have one already. You can do a comparison. Profit and loss detail is going to show you that profit and loss, but then every detail is going to be listed out underneath it. It's not just a summary. That's like a 20-page report, but can be helpful. Then you've got all of the who owes you reports, so you can talk about open invoices. A little bit different from the accounts receivable aging summary because they're not going to give you how far they're overdue. These are just the lists of payments or open invoices that haven't been paid yet. You can do unbilled charges. We made that a favorite. Like unbilled charges, again, would be the stuff that you need to invoice for. That's more money you can collect. Sales and customers, you can run reports, sales by products or service detail. Am I selling more garden gnomes or am I selling more fountains, right? Gut feeling, you kind of know those answers, but without the data to back it up, that's what this report center is for, is to answer the questions that you have about your business. How much did I spend at Arby's? I must know. Okay? Custom reports up at the top is where we're going to find the one that we made, profit and loss by month, made by Craig Carlson. Hi, Craig. Thanks. You can edit it, you can delete it, and do whatever you need. The management reports are kind of cool. Management reports allow you to create a fancy schmancy portfolio for a few different prospective receivers, I guess. The overview one is for any potential buyers who might be interested in, or investors into your company. There's a sales overview one, which you can give to your sales team that talks about sales performances. It'll like compile those reports and put it on fancy letterhead, and yeah. So there's those management reports that you can send out as well. It's a package of them. You can also create your own package. I think in all the subscriptions. I don't know that that's restricted. I mean, the reports, where you are restricted on subscription level is what reports you have available to you, but I think all of you can create management reports. So that is a report center. Any questions, comments, concerns? Ultimately, at the end of the day, right, we're doing everything that we're doing for compliance purposes, but because we also want to be successful at what we're doing. And the only way we can do that is answer the questions that our partners have about us, and what's going on, investors might have, right? We have to be able to answer those questions. We're already tracking the data. We might as well make it give us the answers that we want. So that's why this all boils down to a reconciled, clean set of books, checking your reports, whatever that looks like, your thermostat, your key indicators, or whatever they are, once a month to make sure that you're in the know. You're not, because every business can function with a negative profit margin, but as soon as we're out of cash, there's no operating anymore. So don't get yourself into that position, right? There's ways to fix the negative profit margin before it's too late. So keep an eye on it. It's worth it. Okay, that essentially sums it up, guys. That's everything I was intending to teach you for the last 3 weeks. Hopefully some of it's been helpful.
One voice isn't as effective as a choir of voices standing together, protecting our licensing and trade. Add yours to the UPHCA today at uphca.net/y-join-UPHCA.